Welcome to The Explainer. Man, what a time to be watching the markets. Today, we're going to try and make sense of some really chaotic signals we're seeing. You've got political deadlines crashing into institutional caution, and all the while, retail investors are feeling pretty optimistic. It's a real tug-of-war.
All right, so here's the game plan for today. First up, we're going to tackle that big political pressure cooker that's building. Then we'll see how the crypto world is reacting. After that, we'll zoom out and look at Wall Street, which is frankly all over the place. And to wrap it all up, we'll get a final read on the market's true mood.
So where does all this craziness start? Well, it all kicks off with this massive risk factor hanging over the entire U.S. economy. I'm talking about a potential government shutdown. Now look, there was a key procedural vote that passed, which gave everyone a little sigh of relief, a little glimmer of hope. But don't get too comfortable because we are not out of the woods yet. The whole process is far from over, and that threat of a shutdown, it's still very, very real, and it's got the markets totally on edge.
And yeah, as you can see right here, it's not a simple one-and-done thing. There are still a bunch of legislative hoops to jump through. And honestly, any one of these steps could be a point of failure. The thing is, this uncertainty isn't just some abstract political drama. It's already starting to cause real problems in key parts of the economy.
I mean, check this out. This isn't just a headline you scroll past on your phone. We're talking about the real-world paralysis of air travel across the entire country. When you see something this tangible, this real, it forces investors everywhere to stop and think, to reassess risk. And that, of course, brings us right to the crypto markets.
You know, people often call the crypto market the canary in the coal mine for risk. It kind of gives you an early warning for what the rest of the market is feeling. And right now, that canary is singing two completely different songs at the same time. It's confusing.
So, on one side of the coin, you've got the technical charts. They're basically screaming that Bitcoin is way oversold and it's due for a nice recovery. But then you look at the other side. You look at where the actual money is going, and that data paints a much, much darker picture.
And just look at this number. This is what's so wild. We're talking about the sheer scale of money leaving the space. Over $1 billion pulled from these digital asset funds in just 1 week. That's not a small change. That's a massive vote of no confidence from the big institutional players.
So let's break this down because it's super interesting. The two big kahunas, right? Bitcoin and Ethereum, they saw huge amounts of money flowing out. But at the same time, some investors are making these really targeted bets on other points like Solana. And get this, others are actively betting that Bitcoin's price is going to drop even more. They're buying up short funds. It just goes to show you how split, how totally uncertain the sentiment is right now.
And you know what? This confusion isn't just a crypto thing. Not at all. Over on Wall Street, we're seeing this massive disconnect. A huge gap between what investors are saying and what they're actually doing with their money.
So get this. You ask a bunch of professional investors in a survey, and what did they say? Overwhelming optimism. In fact, it's the most optimistic they've been on stocks in years. You'd think they're all buying, right? Well, their actions tell a completely different story.
Yeah, the so-called smart money, the hedge funds, they are not buying this rally, not even close. In fact, they are dumping stocks at the fastest pace we've seen in months. Talk about mixed signals.
So who's on the other side of that trade? Who's buying what the hedge funds are selling? It's individual investors. Everyday people are pouring money into the market, buying up ETFs like crazy. They're probably looking at this and thinking, hey, this is a classic buy-the-dip moment.
And all this buying brings us to this really famous indicator from Bank of America. Now, this thing is kind of weird because it basically works in reverse. It's a contrarian signal. It warns us that when the market gets this bullish, when everyone is jumping in, a big reversal could be right around the corner. It's that classic saying, right? Be fearful when others are greedy.
Okay, so we've got all these conflicting signals. What in the world is the real feeling out there? To cut through all that noise, we're going to look at the simplest, most powerful metric of all, pure, raw emotion.
And here it is. Despite all that bullishness we saw from retail investors, the big picture is pretty clear. The CNN Fear and Greed Index for the stock market, it is deep, deep in the red. We're talking extreme fear.
And what about crypto? Does it feel differently? Nope. It's a perfect mirror image. The Crypto Fear and Greed Index is also flashing extreme fear. So, when you strip everything else away, the main feeling across all markets is just high anxiety.
So all of this, it really boils down to one critical question. A question that really defines this whole tense moment in the market. When the big institutions are selling and retail investors are buying like there's no tomorrow, you gotta ask, who's right here? It's the ultimate standoff. If you found this video helpful, be sure to smash that like button and subscribe so you don't miss your next Daily Edge. More news in our Telegram channel in the first comment. See you next time.